Hey everyone, welcome to the weekly review. And for this week, we have a couple of scenarios to look at. First thing first, we check the volume, and this is looking more like a counter move than initiation move on the volume side, with the red days on Thursday on and Friday, meaning the bias is bullish. Then we look at the moving averages. We recaptured the 20 and 50 MAs on Thursday. We had this push up on the JOLTS data, which came as a huge miss. And on Friday, we had unemployment at 3.8 and NFP, as expected, didn't really cause a big move. The spike in unemployment came on the back of an increase in labor force participation. So it wasn't because there are fewer jobs, it was because there are more people working. Still a sign of a weakening economy in a way, but it's not as bad as you may think. And the fact that we recaptured all of these levels, we are back above the quarterly open, and just the fact that we recaptured the quarterly open is a huge bullish move. And on Wednesday, I think, or Thursday, I warned about VIX. So let's look at VIX first. Well, we are almost at the lows again. I think we can go as low as 12. The problem I have with VIX is that we may get a repeat of June. And in June, uh, quarterly OPEX as well, we were also near the lows. This is June 6, 7, 8, 9, 10 until here. And VIX didn't go down meaningfully, but we had this day on June 12th, which was plus 8%, and on SPY it was June 8th. Oh, sorry, June 12th, and it was 0.91% up. And I fear we might be going into a similar scenario. And even though VIX is at the lows and VVIX is at the lows, even though they can spike up, it doesn't mean that the market will go down. I'm kind of fearing a scenario like in June when we had vol up and market up, and we had a bit of a spike up in. We moved up until OPEX basically. Thursday was the top, and then Friday we started going down, and the correction was small. It was only what's this 286. This being said, let's look at some possible scenarios, and I think there are three in total. Quarterly levels as well. And I have Friday and OPEX. It's the horizontal levels. Okay, first things first. Because VIX is this low and there are some mega cap which are very close to resistance, and I'll show in a second. The first scenario is one in which we drop a bit. And the drop level is down to the Q3 mid and the combo of last week's mid, then bounce, uh, go up. My target for the bullish move is 460 by OPEX in this scenario. Then, what if this doesn't hold? Then how low do we go? I think we retest the quarterly low, open, sorry, maybe even overshoot a bit. I think we turn this trend line, which if we adjust it for the time frame to 1 hour, it's going to be a bit higher. Uh, so something like this. And I think we bounce on the quarterly open and then start going up, maybe consolidate a bit a while, then start going up next week. Then the last option is the bullish one, in which we just go to 460 directly. And this one, like I explained a bit earlier due to the VIX situation, has the potential to be a breakout move and even go to 470 by uh, by OPEX. You have to watch what happens at 460. But if we get, this is the blow off move I'm kind of fearing right now. And I'll make a case for each one. So first things first is, what do we need to fade something? We need to move the move to be short-term overextended, and we're not in that scenario yet. For example, when if we would have gone to 460 on Friday, that would have been a clear fade, because the move up is too fast and uh, too strong percentage-wise. If I turn on the moving averages in Bollinger, we see that the Bollinger here is just about here, so it would have been a huge move upside Bollinger too. It was an easy fade. The same kind of situation is applicable anytime, early next week. If we get a move that happens too quickly that takes us to 460, that is a fade. Other than that, it is not a fade. Like for example, if we get to 460 in a month, that's not an issue. 460 won't be a problem to get to in a month. But if we get to it on Monday, if we get to it on Tuesday, then it becomes a bit problematic. Like we move too fast, too quickly, and it's no longer a fade. So I think the window is Monday or Tuesday. Otherwise, it's more of a bullish momentum move that plays in the scenario that takes us to uh, did I delete the other one? Takes us to 470 by OPEX, something like that. And a few examples like this one is overextended. This one, this one, this one even. We want to look at Bollinger being outside the Bollinger too. Here, here. And we don't care if what happens. It's a short-term play. Like in 1-2 days, we should see a counter move like we did here, like we did here, and that's kind of it. Now, looking at mega caps to give us a better understanding of the situation, Apple is the most relevant one, because we have this area here at 190, 191, in which was support for a quite a bit of time, and multiple times in the past as well. And when we lost it, we had this huge gap down with follow through from earnings, and we went down a lot. And we are getting to this level now, and I think we will get rejected from it. This is kind of why I think we may get into the uh, pullback scenario for Monday or Tuesday, because of Apple will get rejected. And I don't think it gets a large pullback, more like from 191 back to 185 at most, 187-ish, something like this. But then it bounces and we get into the scenario in which we go to 160 over 2 weeks, maybe something like that. If this doesn't hold here, we go even lower to 175-ish, 177, 175-ish, and we see what happens here. This is the scenario in which the market doesn't hold that level and it goes back to the quarterly open. So one argument for getting a rejection on the market and doing a shallow pullback. Then Tesla is the same kind of thing. Tesla, the long-term pattern trend line is this, and we have these deviations here, 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 and here. And I think it's likely that we will get a deviation of the same type here as well. So I think Tesla bounces somewhere around between 230 and 236, and then we get this move up, and we go towards 280, maybe a bit lower, but that's kind of my expectation. Nvidia, I think we see some sideways, could do another pullback back to this horizontal level now here, something like this, to what's this, 470, down to 460 maximum. Uh, but I think it now goes into consolidation, something like this, uh, building towards another breakout or potential breakdown later. Google, very close to the next level. Another green day should do it. What's this? It's 3%ish to get into that area. So as you can see, they're all kind of close to their targets. And because of this, Amazon same kind of thing. Because of this, I think we may see the pullback scenario early next week on actually on Tuesday because Monday is closed. Microsoft depends on the market. If we get the market pullback, it should go back to 323. If not, maybe it breaks out here and goes to 342. Meta should keep following this. Netflix, I changed it. Initially, it was something like this, and I don't think it will do that. I think we now go a bit sideways, hug the midpoint, and eventually, when we get the breakout above 450, we go towards this 485, potentially to the top of the channel. And some should continue doing this. We're getting now to the demand zone, supply zone, sorry, because of this. So might get a bit of a rejection, something like this. But I still think it goes to as high as 120, which is around here, eventually. The slam dunk play, I think, is still TLT. Let's look at the U20 year because I I'm very sure that we will get a double top here, even if we go higher. On Friday we got another push up, but there is no fucking way this goes higher. There's no they're not hiking anymore as the job market is turning. If you guys follow Nick Timiraos on Twitter, he keeps posting stuff about how happy the Fed is with what is happening now with the jobs market and unemployment and jolts. So I would be very surprised to see them keep hiking. Even if they keep hiking, they will do so once and that's it. I think we are at the end of the cycle of the first inflation cycle. Maybe there will be more, maybe there won't. And if we get another cycle, it will be in 1 or 2 years, not now. And once we get out of the inflationary loop, the bond stock correlation should go back to what it's been doing for the last 40 years, meaning being inverse. When shit gets down, meaning stocks go down for the market, bonds go up because there's a flight to safety. And uh, when the flight to safety starts, there will also be short covering for bonds. There will also be a flight into bonds to lock in the yields that we have now because these are very good yields for even the 10 year, the 20 year, the 30 year, and so on. And we should see a very large drop in yields. My expectation is that we will get as low as 370, which is equivalent to TLT at 108. So expectation is that we go to 108, and the worst possible drawdown from here is getting to 89. I think TLT is borderline all in ready. If we get to 89 for whatever reason, I don't know what could cause it, but I don't think it will happen. But if we were to get to it, I think I'm going all in on TLT, like max expiration calls. Other than that, if you go shares, then there's no way you can go wrong with TLT at 89. But like I said, I don't think we go down. Maybe we do something like this, potentially bounce on 93. I will be adding at this level as well, uh, and start going up and up and up. When this happens, the market should correct significantly. I expect anything between 10 and 20%, 20% being the extreme, but 10% for sure when this happens, because the economy will start showing weakness very soon. The jobs market is turning. The GDP forecast from the Fed, which is now at almost 6%, is not going to survive this in September. Like it's gonna still stay positive, like 2.5, 3%. But just the fact that we will get headline after headline after headline, that the Fed nowcasting for GDP gets revised down over and over again, will start putting pressure on stocks, and it will make uh, yields go down, and unemployment plus bad economic news, relative news, will make yields go down and bonds go up. So this is my expectation. The only safe play right now, I think, is TLT. For market, I'm fearing the blow-off move to 470, just like we had uh, in June, because there's too much negative sentiment. Like even in June, people thought we would go down. I thought we would go down. I made a mistake of going short too early, and because we didn't get that big of a pullback, it wasn't a great play. I think I went short somewhere around here. This was 446, and then we went to 444, and that fucked me over. Uh, honest, in that idea that it's not a good feeling to hold a big position in puts that goes against you, even though eventually it worked out, meaning didn't lose money on it, didn't make a lot of money, and I fear this may happen again here. So imagine you short at 460 and then it goes at 470. It doesn't matter that maybe afterwards it falls down here. It will feel shitty and you will have a hard time holding through it when you are down like 30-40% because of $10. Uh, yeah, that's kind of the reasoning. Have a good one. Bye bye.